U.S. stocks prices suffered their worst week so far this year, with the S&P 500 falling 1.56%, the Dow Jones dropped 2.37%, while the NASDAQ declined 0.45% by Friday's close. Stronger U.S. CPI inflation data, 3.8% versus 3.7% expected, on Wednesday, set the cautious tone as traders scaled back expectations of a Fed June rate cut to August or September. Softer U.S. producer price index data increased negative sentiment. The U.S. dollar pushed higher by the end of the week. Gold prices recorded more all-time highs on potential conflict in the Middle East, but fell on Friday. Natural gas prices jumped to an almost one-month high before pairing returns by Friday's close. Crude oil prices declined as U.S. inventories rose more quickly than expected, and platinum prices hit a three-month high. The earnings season kicked off with banks such as J.P. Morgan, Citigroup, and Wells Fargo recording better-than-expected results. The primary focus will be on escalating tensions in the Middle East and Israel's response to Iran's attack over the weekend. Higher-than-expected U.S. retail sales data on Monday caused further inflation worries among traders. Better-than-expected Chinese GDP data eased concerns about the Chinese economy. Statements from Fed officials, including Chair Powell, may have an impact on markets. In Europe, Wednesday's CPI inflation data came in on target at 2.4%. This week, we'll see an increase in earnings reports, with earnings season in full swing following better-than-expected results from Goldman Sachs. Major companies such as Netflix, April 18th, will also report their results later this week. As a result of higher-than-expected inflation data and the increasing impact of geopolitical factors, stocks, gold, crude oil, platinum, and natural gas are likely to experience volatility. Google price climbed last week, hitting an all-time high on Friday. The company is now worth almost $2 trillion. On Tuesday, Google announced the release of its new AI chip, which is set to challenge both NVIDIA, the market leader, and rival chip designers. Google also presented its new CPU, named Axion, which is set to rival similar chips from Microsoft and Amazon. Despite the stock sell-off last week, Apple climbed around 4% and had the largest increase on the Dow Jones index. The stock recorded an almost four-week high after the company revealed AI chips in its new MacBooks. Apple also outlined that next year's iPhone 17 will run on AI chips, enabling the company to emphasize how it remains at the cutting edge of AI technology. On Tuesday, Apple announced it produces 14% of its flagship product, the iPhone, in India, compared to 7% last year. Crude oil's price edged down by 0.47% after recording an almost six-month high earlier in the week. Oil prices fell after U.S. inventories rose more than expected, suggesting a decline in demand for oil over the previous week. Last week's rising dollar also made oil less attractive for holders of other currencies, since oil trades are largely calculated in dollars. Gold prices continued to strike fresh all-time highs last week and ended the week 1.4% higher, despite the late surge in the value of the dollar. Gold traders watched the escalating situation in the Middle East, and prices were supported by Iranian statements suggesting that the country might block the Strait of Hormuz. Increased expectations that rate cuts in June are unlikely and may take place in August paired some of gold's returns. Platinum prices recorded a three-month high and jumped by 5.8% by close of business on Friday. The World Platinum Investment Council said the industry will remain in deficit due to problems in the mining industry while demand from car makers continues to be firm. Better manufacturing data from China has underpinned the metal recently. The EUR-USD dropped to a five-month low as the dollar pushed higher against most of its rivals. The pair had been trading in a range since early March, but stronger inflation data supported the greenback as hopes for a June Fed rate cut faded. In the Eurozone, interest rates were kept at 4.5%, but ECB head Lagarde suggested that a June rate cut was possible.